experts from One Manchester. This is a session we were looking forward to understand how is that as a tenant from One Manchester, how is that you can purchase a home? What is the process? Is it that simple? Is it complicated? We have, I think we'll have today somebody who's gone through the process and we will be able to talk about her experience. So we're very grateful to have on here our partners, stakeholders from One Manchester. So Izzy Teller, thank you very much for being here with the team. And I'm going to let Izzy introduce herself and introduce members of her teams. Again, thank you very much for the session today. Over to you, Izzy.
Thank you, Sandy, and we're delighted to come here this evening and share with you all the different affordable housing options that are available to you. And we also wanted to talk you through the One Manchester process for accessing homes. So I've got my two colleagues that I'd like to introduce to you, Sarah Tate and Amy Stone, who will be taking us through the presentation, and there'll be plenty of time for questions. We've also got Megan on the call, who is our partnership colleague who does a lot of work with Khan on an ongoing basis. So I'd love to hear your feedback, and we're also really open to feedback about how we can make things more simple and make sure that we're communicating with people in the right way. But without further ado, I'll hand you over to Sarah and Amy so that they can begin the presentation and we can get into the session today. Thank you.
Well, hello everybody. My name's Sarah Tate. I'm the commercial manager at One Manchester, and I'm going to be taking you through the first part of the presentation, which is about what affordable housing pathways there is open to people. So Amy, if you just want to go onto the context page, please. Amy's going to be my presenter for this evening. Next, please, yes. So the options I'm going to discuss are the Help to Buy, First Homes, Shared Ownership and Rent to Buy. Then Amy's going to finish the session with the Right to Buy and the Right to Acquire. There's loads of different terminology with these housing pathways, and you will get used to them as we go through the slides. So the first option that's open to people on the open market is something called the Help to Buy. The Help to Buy is an equity loan, and you can get up to 20% of the property price as a loan, an interest-free loan for 5 years from the government, and you only need to get a 5% mortgage to access this. So if you just want to go on to the next slide, Amy, please. There's always criteria for applying for these affordable housing options, but what you'll notice as we go through these slides is that for each pathway there's similar criteria. So once you know the criteria for one, you'll see a common theme going through them all. So for the Help to Buy, it's just recently changed. So I'm going to talk about the new model that started on the 1st of April 2021. You have to be a first-time buyer to access this option, and you can get up to a 20% loan as long as the property is no more than, I think it's £224,500. You can't own a property anywhere in the world, and you know, you sometimes you've got to have a local connection. It depends on the developer. Next slide, please, Amy. I've broken the criteria down for you here, so you can see the simple criteria. So like I said, must be a first-time buyer in the northwest area only. So in Manchester, the price cap is £224,000, should I say, £400. It's a bit of a random figure that I like nice round numbers, but this is because the government have said that that is approximately the average price a first home buyer would pay in the northwest. And like I say, you would need to be able to access a mortgage for this option, so you'd have to have a reasonable credit rating. Next slide, please, Amy. I had a quick look yesterday, actually, about where these were available in Manchester. And because it's a new model that's just come out, there's not that many going at the moment, but we'll see more coming through in the coming couple of years. So there's only one available at the moment, and that's the Hallmark in Manchester, which is in the Green Quarter, and their apartments. But if, for example, on one of these, you was to purchase one, which should cost about £200,000, you could get an equity loan for 20%, which would be £40,000. And that would be interest free for 5 years. So you wouldn't pay no money back on that for 5 years. And then after 5 years, they start putting interest on, and it's a very low interest to start with, and it goes up in price as the years go on. So I think after 5 years, you pay about 1.17% interest on that loan. The way that the government gets the money back, if you £100,000, you would have to pay 60,000 back to the government. So that original 20% stake that you got the loan for would have increased. So it goes on the property value when you sell the property, and that's the bit you've got to remember. The loan itself only has to be paid back when you sell the property or after 25 years, which is quite a good number of years. What I did find interesting when I was looking at this is that most mortgages these days are longer than the traditional 25 years. They normally tend to be for 30, 35 years these days. So it just intrigued me why the government haven't extended that to match what current mortgages are being offered at. Like I said, you will need to get a conventional mortgage, and it would be, your usual high street lenders that you would go to. So HSB, TSB, that kind of lender. Next slide, please, Amy. So the next kind of product that's available at the moment, and this is new, it's called First Homes. And I like this one because with First Homes, there's a property that's got an open market value, and when you come to purchase it, there's a discount on it, and it's a minimum of 30% discount. Now that discount stays with the property in perpetuity, so it lasts for as long as that property is being lived in. So the discount is only for first-time buyers as well, and again, that criteria stays with the property. So if you go on to the next slide, Amy, please. You'll see a familiar theme, like I said, going through this. It's only available to first-time buyers. Your salary when you apply for this cannot exceed £80,000 a year, and that's whether you're a single applicant or a joint applicant. So a single person on their own could earn £79,000 and be able to apply for this kind of property, or you could have a couple who could both earn £39,000 each, and they would be suitable for this product. And like I said, the discount on these First Homes is in perpetuity, and the criteria also applies. So it's going to be forever, be for a first-time buyer, and that discount would always be on the property. So I think that's quite a good thing. Now, this is new. So if you go on to the next slide, Amy, please. Sorry, gone a bit ahead of myself there. So this is a new product, and there's not any over in the Northwest at the moment. There's only 2 test pilot schemes south of here. I think one in Bolsover in the Midlands and another one further down south. But we will start seeing them come to the Manchester area probably about 2023, because that is when all the planning obligations are going to go through. Because at the moment, I think the government is saying they expect developers to have 25% of their affordable element on these First Homes. So you will start seeing them coming through in the next couple of years. The next product I want to talk about is one that's very close to my heart, and I've been working with shared ownership for years, and I love it. I've seen it's been so successful for a number of people, but it's often, misunderstood really, and I think it's the way it's advertised more than anything else. So with shared ownership, it's you don't share it with anybody. You don't have to share with family or friends or anything like that. You're basically just buying a percentage of the property, and then you rent the part that you don't own. Now, there is a little YouTube video that I'd like to show you, and I'm not sure if it'll work. So do you want to give it a go, Amy, see if it works? And if it doesn't, we'll just swiftly move on. Doesn't look like it's working, does it? Is it not working, Amy?
It's playing on my screen. Have you not got it?
I've not got it, no. Has anybody else got it?
No.
No.
We will swiftly move on then. That's the first tech fail of the day. Sorry about that, everybody. So yes, with shared ownership, it's not about sharing with anybody else. You own the property, you move in, and all it is you're able to purchase it on a mortgage because you're buying a smaller share, so you can have that deposit for the mortgage. Shared ownership has been around for well over 30 years. So even though the shared ownership properties One Manchester offer are all new builds, you will find there's a lot of resale shared ownership out there as well. And to apply for shared ownership, you just need to go to the Help to Buy Northwest website. And that is the website where you apply for all these affordable products. Do you want to go on to the next slide, Amy? There you go. And this is the criteria again for shared ownership. And as you can see, it's similar to the First Homes and Help to Buy. You've got to be first time buyers. Your salary cannot exceed £80,000 a year, whether it's a single or joint application. On shared ownership, at the moment, you can buy between 25% and 75% of the property. But there is a new scheme coming out, which just to complicate things and confuse people even more, where in future programs, you can buy between 10% and 75%, but that'll all be around late 2022. And with the shared ownership, the rent that you pay on the part that you don't own will be set at 2.75%. And I'll explain how that's calculated on the next slide. Do you want to move on, Amy? I think you've gone past one there. Back one, please. Oops. Slide 11. There you go. Right. Okay. So with the shared ownership scheme and with a lot of these schemes, it's all about affordability and sustainability, because the last thing anybody wants on these affordable housing products is for somebody to move in and then to fail and to not be able to pay the rent or to pay the mortgage and the property get repossessed. So part of the application process is about doing an affordability and sustainability calculation. And it's quite a simple calculation. I don't know how clearly you can see that. But basically you just put your income in, the price of the property. It tells you down here what the deposit requirements are. And then there's some key indicators along the bottom. And you can't see them, but I will talk you through them. Basically what it says is that your total housing cost, so the amount you pay on rent, the amount you pay on mortgage and any service charge, cannot exceed 45% of your income. And the government say that that is a good target, because if you pay any more than that on your housing costs, the likelihood that you'll fail and you'll go behind is likely to happen. So it's a maximum of 45% of your income. It also says that you cannot get a mortgage that's more than 4.5 times your income. So to put that simply in easy figures that I like, if you earn £10,000 a year, you cannot get a mortgage, for more than £45,000 a year. And it's them key indicators that ensure that it's sustainable as much as possible into the future. And that's a simple calculation that's done for every application. And the government says we have to do that and keep it on file. Next slide, please, Amy. One thing I thought it would be interesting to show you is the comparative cost between shared ownership and private renting. And we're currently got a shared ownership scheme that we're selling. It's been a very popular scheme in Clayton. It's called Eastvale. I don't know if you've seen it advertised, but at the moment we're selling 3-bedroom shared ownership properties there. And the market value of a 3-bedroom property in Clayton at the moment is £205,000. So based on that, if you was to buy a 35% share, you would have to get a mortgage of £71,750. Now that would be accessible to anybody who's got an income of £21,000 or more. So if you earn £21,000, it's possible you could go and get a mortgage and buy one of these shared ownership properties. You would need a deposit of £3,588, and that would be your 5% deposit towards your mortgage share. Now, while that's a lot of money and, you know, it will take a while to save, it's not out of reach for everybody, you know. It's more doable than trying to find a £20,000 deposit for purchasing on the open market. And I was just looking at the cost then of the monthly housing cost of a shared ownership property against a private rented one. And I did a look on Rightmove, and I just picked two examples. They're there on the screen. Apologies if you know the properties. And there, I looked at them for renting. So the 3-bedroom houses for rent in Clayton at the moment. And as you can see from the rents, astonishingly, £800, £950 per calendar month, which is a lot of money. And if you look at the shared ownership costs, once you've saved for that deposit, your monthly mortgage costs, your rental costs, and your service charge would only be £640 a month. Now, to me, that's a big difference in housing cost, you know, for shared ownership against the private rental market. And what struck me as well is the properties we're offering at East Vale, they're brand new and they're very thermally efficient. You know, so they've got an EPC, an Energy Performance Certificate of B, which means they're very thermally efficient, which means your utility bills, your gas, your electric, your water will be a lot less. Whereas with the private rented one, especially the one that's £799 a month, that's only a D. So the utility costs on that will be a lot higher. So it just goes to show the difference there between the two products, really. Next slide, please, Amy. And I just wanted to demystify the rent side on shared ownership a little bit, because you say to somebody, oh, you'll pay 2.75%, and you think, what does that mean? So to make it easy, there's a little diagram, but if you had a property that was worth £150,000 and you bought a 50% share for £75,000, you will pay 2.75% on the £75,000 that you don't own. Now, if anybody's really good at maths and can do that in the head, fantastic. But if you can't, it's £2,064. So it will be £2,064 a year rent. And if you divide that by 12, it works out at £172 a month. And that's how we calculate the rental element of a shared ownership property. Next slide, please, Amy. Now, this is a lovely term that I love. Some guru came up with it 30 years ago. I don't know if you're a genius or not, but it's called staircasing. And what staircasing means, it means buying further shares in the property. So what normally happens, and this is why I think shared ownership is fantastic, you buy a share in a property and you'll normally get a fixed term mortgage for 2 years or 3 years, whatever it may be. And after that fixed term is over, you've paid some off your capital of that mortgage, so you've reduced it. And then property prices have gone up a little bit, so your equity in the share you own has increased. And you go to remortgage, and that is a fantastic time to think about staircasing, about buying further shares in the property. So when you get to that point, you'll go to the provider and you'll say, I'd like to buy more shares, please. And the provider will say, that's great. You'll need to get a RICS valuation. And now a RICS valuation just means an open market valuation done by a surveyor who's a member of the Royal Institute of Chartered Surveyors. So you get a RICS valuation, you send it to the provider, and then they will offer you that share at whatever value that market valuation states. So if you get a RICS valuation for your property and it's worth £150,000 and you want to buy a 50% share, the association will say, right, we offer you 50% at £75,000, and you accept. And then you will at that point have additional costs for your solicitor, because you do need to get a solicitor. but then you pay your own solicitors, but the provider will pay their solicitor fees, and then you'll buy your shares that way. And the intention is obviously that at some point you will staircase out, you'll purchase 100% of the property. Once you get to 100%, purchase 100% of the property, if the association owns the freehold, they will transfer that to you free of charge. So you will then own the property outright with good title. And that's the purpose of the scheme, I suppose. Next slide, please, Amy. Another product that's available at the moment, and again, this is quite a recent one. One Manchester was was the first provider to offer it in Manchester. It's a product called the Rent to Buy. Now, again, I like the Rent to Buy. I think it's a fantastic way of getting on the housing market. So with the Rent to Buy, again, it's about people having the ability to try and get this deposit together so they can get the mortgage. With the Rent to Buy, we will offer you a tenancy, and you will take that tenancy and you will pay a reduced rent. So you'll pay 80% of what the market says you should pay for the rent on that property. And the purpose of that is that you can then save that 20% that you're not paying in rent, you can put it away in a bank account and you can save for that deposit, so that after 5 years, you can purchase the property outright. So during the course of that, you can live in a brand new property. So you get to, some people have said try before you buy, which is a good way of looking at it. So you get to know the area, you get to settle in the property, you can just, decorate it to your style. You're paying a reduced rent, so 80% of the market on it, and then you can save as well towards your deposit. The other good thing about the Rent to Buy is that it also allows you to repair any damage you may have to your credit history, for example. Some people, when they're young, they might be a bit silly with money. They might, get CCJs, etc. So they cannot get a mortgage at that point. But obviously, after 5 years, 5 years a period of time, you can improve your credit rating. So it allows you to do that as well. So you can save for your deposit and improve your credit rating at the same time. Next slide, please, Amy, because the video won't work that I put on there. So with the Rent to Buy, slightly different from the other products, as in you apply directly to the provider for it. You don't have to go through the Help to Buy agent. But the criteria for it is it's the same as shared ownership. There's a reason for that. With Rent to Buy, it's expected you'll purchase it after 5 years. But within the 5 years, you can ask if you can purchase it on a shared ownership basis. And One Manchester's policy is, if it's financially viable to us to do so, we will sell it on a shared ownership basis to you. Because some people, they might be ready to purchase after year 2, for example. It depends on people's circumstances. Because what I found doing this for the number of years I have is that everybody's different. Everybody saves different, everybody's got different goals in mind. So that's the reason it mirrors the shared ownership scheme. Next slide, please, Amy. And then finally, before we go on to Amy, and she talks about the right to rent to buy, right, they're all the same, and the right to buy and right to acquire. I was comparing the Help to Buy with the shared ownership, and the both products are very similar, And I was looking at the London prices, and when you compare London values, it works out exactly the same. But up in the north, where the property prices are a little bit less, there is a slight difference between them, but not much. So I just thought it would be interesting to share some figures with you about the cost of each. So if you look at the two, if you was to purchase a home for £200,000, you can see with the Help to Buy, you would get that 20% equity loan for £40,000, and you would need £8,000 for your deposit for the mortgage. With the shared ownership, very similar really, you would need a £7,500 deposit for the mortgage. What is interesting is when the values increase, after, say, the properties went up to 300,000, you would end up having slightly more equity on the Help to Buy than you would shared ownership, but only very slight. So it just depends on what product is right for you at the time when you're purchasing. And I think that's what you've got to look at. Is the product in the area you want to live in? Is it being offered on the property that you want to live in? And what your financial circumstances are at the time. And that's it for me. Thank you very much.
Thank you very much, Sarah. That was a lovely presentation. I have to say, informative, really.
Thank you.
I don't know if Amy has a presentation as well.
Yeah, so I've got a presentation for the right to buy and right
over
to
to
acquire.
you.
Right. So we'll start with who has the right to buy. So if you are a council or local authority tenant, you will have the right to buy as long as you have lived in that property and held your tenancy for 3 or more years. If you are a housing association tenant, you may have the preserved right to buy. So what that will mean is that when you originally signed your tenancy, you signed up with a local authority or council, and they stock transferred your property across to a housing association. When you stock transfer across, your right to buy follows you and will be honoured by that housing association for as long as you live in that property or in a property owned by that housing association. The other scheme is the right to acquire. So if you live with a housing association, you have the right to acquire as long as you have held your tenancy for more than 3 years. Okay, so there are circumstances in which you can't exercise your right to buy or right to acquire, and those are if your home is due to be demolished. So you can apply to buy your property if you have an initial demolition notice, but your application would not be processed. Now, if that initial demolition process didn't go through, then you'd be able to apply and your application would stand and continue. If you were then served with a final demolition notice, your application would be terminated and you wouldn't be able to purchase that property. If your property was purpose-built for the elderly or disabled, so for example, if you live in sheltered accommodation or a bungalow, you are not eligible to purchase that property. If you have a suspended possession order against your tenancy, this could be for rent arrears or antisocial behaviour, you wouldn't be able to exercise your right to buy or your right to acquire until that had been dissolved. And if you are undischarged bankrupt, you would not be able to apply. So you'd make that application and it would be denied. Things to consider before you try to purchase your home. So with the right to buy and the right to acquire, things such as the valuation are paid for by the housing association, but there are costs that you will incur. So you need to think about a structural survey. Your housing provider will not do a structural survey. They will just do a bulk standard comparable valuation. You will cover the cost of your own legal fees, and the housing association will cover the cost of theirs. Legal fees can vary depending on the number of searches that are required for the property, and in fact, if you're buying freehold or leasehold, but typically we've seen that they range between £800 and £1,500. You also need to take into consideration your mortgage fees. So when you apply for a mortgage, your mortgage lender will charge you a fee to cover the admin costs of that mortgage offer. And if you choose to access your mortgage via a mortgage broker, they may charge you as well. Some do recover the costs from the mortgage lender, but predominantly they charge yourself for it. So long-term costs to consider. You need to consider the buildings and contents insurance for your property if you are buying freehold. So if you're buying a house, once you've purchased, you will have to get buildings and contents insurance. This will be something that your mortgage provider will ask you to do as well. If you buy leasehold, then your buildings insurance is usually included within your service charges. So you would only need to get contents insurance. You also need to take into consideration the maintenance and repair for your property. So if you're buying from a housing association or local authority, chances are your property is an older one. It's not going to be brand spanking new. So it will have an upkeep and a cost. in terms of things like a roof and your boiler, whereas before you will have just phoned your housing provider and they will have done those. Once you purchase, that is all on you to do. And if you purchase a flat, you need to take into consideration the service charges and ground rent that you would have to pay, as well as any major works for any communal areas or the building. Okay, so the process. Your application you can access from either your housing provider or the DirectGov website. What you do is you complete that application and submit it to your landlord. Once your landlord receives that from you, they have 4 weeks to respond to you to say if your application has been admitted or denied. So the examples I gave before as to when you wouldn't be able to exercise your right to buy, in those circumstances, your application would then be denied. However, for a majority, your application is admitted. What you'd usually, well, what One Manchester do during those 4 weeks is perform a rent check, an ID check on yourselves and any applicants joining the application with you. Once that application has been admitted, we will order a valuation and you will then be put onto restricted repairs. Sorry. So your housing provider will only carry out health and safety or emergency repairs for you throughout the process. Some examples of these are if you had a leak on your roof that was coming through, then obviously they're going to repair that. We have to keep the property weather tight, wind proof, and keep you with a supply of hot water, clean water and heat. But for example, if you had a leak in your roof and it came down through and it left a nice big stain like they usually do on your plasterboard, your housing provider wouldn't have to replace that plasterboard because that would be cosmetic, unless it was falling down. If it was falling down and therefore a danger to yourselves, it would either be taken down or replaced. Now, it takes 8 weeks for the valuation to be done for a house and then 12 weeks for a flat. So once that 8 weeks and 12 weeks have passed, you would then get your Section 125, which is your offer letter. Once you receive that offer letter, which would include the letter outlining any discount you would be receiving and the purchase price expected of you, you would also get with that a copy of the valuation report. You would receive plans outlining the boundaries of your property and what's called a notice of intention. Now, your notice of intention is what provides you with all the answers to your questions. So it gives you your 3 options. So your first option is to accept the offer. If you're happy with the offer and you go off and you find a mortgage, and you've got all your funds in place, you accept your offer, you appoint solicitors to act on your behalf. You will then send your mortgage offer and your solicitor's details across to your housing provider, and they would send it on to their solicitors and they would go to completion stage then. That roughly takes between 6 and 8 weeks, depending on the circumstances, but it can take longer. There is a statute of 156 days for that if required, and then a further 156 days after that in some very special circumstances. Also, with your notice of intention, you do have 2 other options. Once you apply using the right to buy or the right to acquire, you are not obliged to buy the property. If for any reason it isn't the right circumstances for you, then you can cancel your application and you can reapply again in the future if your circumstances changed. If you were to cancel your application, you would go back onto your normal repairs system, and any outstanding repairs would be done by a housing provider and they would continue to do those repairs. Okay, so the discount. Oh, sorry. Sorry, I've skipped ahead of myself there. There we go. So for the right to acquire, your discount, regardless, once you hit 3 years, your discount is then as follows. So for Stockport, it's £11,000. For Greater Manchester, Trafford, it's £10,000. And then for Greater Manchester, Bolton, Bury, Oldham, Rochdale, Salford and Tameside, it's £9,000. With the right to acquire, your discount doesn't change no matter how many years you live in that property. So obviously with the right to acquire, the sooner you buy, the more benefit you get from your discount. However, with the right to buy, it is a percentage-based discount. So if you live in a house, you will get 35% for your first 5 years, or your first 3 to 5 years, and then after 5 years, it will increase by 1% each year. There is a cap on the right to buy, and that is 70%, or this year it is 84,600, but that does go up with the what it's called, the index, or the consumer index. So each year, if the consumer index increases, the cash amount does increase with the right to buy. And then if you live in a flat, you get 50% for your first 3 to 5 years and 2% every year after that. So again, it has the cap of 70% and the 84,600. 84,600. And then if you, sorry, I've completely lost my train of thought. Yeah, so, right. Okay, so once you receive your offer, and if you disagree with that offer, so if you feel that your valuation was too high, you can appeal by way of the district valuer. So the district valuer is a specialist valuer employed by the valuation agency. And what you do is on your notice of intention, you'd send that back, and your housing provider would then register you for a redetermination from the district valuer. Once your housing provider has done that, the district valuer will contact you. They will contact you to offer you 21 days to provide any evidence to support why you disagree with the valuation. Once they receive all evidence from you, they will then arrange an appointment to come out and value your property. Usually, the district valuer can take around 4 months. However, during COVID, they haven't done any valuations. So at this point in time, they have an immense backlog. And at the moment, we're seeing on average, it takes about 9 months for the district valuer to contact, arrange appointment, and provide us with a valuation. Now, if the district valuer changes the price of your property, be that up or down, or even when it stays the same, you will be given a new offer. This one's called a Section 128. So your housing provider will provide you with the second offer, and again, give you 12 weeks to respond to that offer. At this point, you would either accept or cancel your application. And again, if you were to accept this offer, you would put your mortgage in place and appoint solicitors to act on your behalf and send all the details across to your housing provider so that they could then do everything across for completion. Once you purchase, so if you purchase using the right to acquire or the right to buy, the restrictions are exactly the same. Your first restriction, which lasts for 5 years, is a repayment of discount. So if you choose to sell your property within the first 5 years, you may repay some or sometimes more of the discount you received. The discount repayment is based upon the market value at the time that you go to resell the property, and the discount you received at the time of purchase, and then how many years after purchase you are. So within the first year, you would repay all of your discount. However, if your property had increased in value during that time, you could potentially end up paying back more. If you get to year 2, it goes down by 20% each year. So after year two, you repay 80% of your discount, 60, 40, 20. And then after year 5, you do not repay any discount. However, you do still have to offer your housing provider the chance of the right of first refusal. What this means is before you look to sell your property on the open market, you need to contact the housing association or council that you purchased the property from, and you need to provide them with details of your asking price for your property and the number of bedrooms in your property, and then they will make a decision as to whether or not they wish to purchase that property back. If they wish to purchase it back, it is purchased back on a price agreeable between both yourselves, so usually the market value. However, if they do not wish to purchase it, then what you do is you would put your house on the open market, you would arrange a sale, and then once you'd arrange that sale and you go to completion stage, you would contact the housing provider and they would provide you with a 156A certificate for you to register at Land Registry to say that they were happy for you to sell the property and your sale meets the criteria of the restrictions. And that's everything for the right to buy and right to acquire.
Okay, thank you very much, Amy. That has been very, very informative. Thank you to you both. And I can see loads of questions coming in already. Before we start the Q&A, I don't know if AC wants to say something.
No, I just wanted to say thank you very much, and I'm happy to hand it over to questions.
Perfect. Thank you very much, Izzy. I have Dominic who's raised a hand. I have to say that Dominic is she's actually a One Manchester tenant, and she's gone through the process. So Dominic, over to you. I don't know if you want to share your experience, and I will take some questions from the chat box.
Yes, I do want to share my experience, but at the same time as well, do have questions, if that's okay. First of all, I've been communicating with One Manchester for the mortgage for us to be able to purchase the property in which we are living at the moment. And so far it's been really, I mean, the communication has been quite good, knowing that I think Amy mentioned there's quite a backlog. And I think that was my biggest concern, is that the backlog was quite big in terms of in terms of coming back to me when I was communicating. Not in the sense of anger, but I kind of felt the pain of the lady I was dealing with, because she had so much to handle at the same time, having to deal with multiple applicants. I think I had to take it upon me to kind of chase quite often to see where they are at with the documents. The other thing as well that I could say is that at the same time was also a win-win from my side, because it kind of allowed us to save a bit more, because knowing that the deadline was kind of pushed forward, knowing that it didn't have enough time to be able to process documents. So I wouldn't say it was all negative. It was also a win-win from my side in that perspective. The other thing as well that I will want to say is that it might take a bit longer. I think, knowing that we've all gone through COVID within this period of time, I think it's understandable. And I'm not going to talk. I'm going to talk for myself, but I guess based on all what's going on in general, I'm sure it's definitely due to the market kind of picking up, and everyone is trying to purchase properties during this period of time, and the backlog is just going probably bigger and bigger for you guys. I think in general my experience has been quite positive. But there's one thing I want to say, because that was one of the questions I wanted to ask for. It's something that Amy presented, I think, on her. I don't know if you can. I don't know if she can still share her screen in terms of the second slide that she was talking about, moving from a right to buy to a right to acquire.
So the difference between the two.
Yes. I want to know, I think the second, there was a terminology that you did use in terms of moving from one to another. I'm not sure what that was. I can't remember exactly what you used. Stock transfer. Stock transfer, yes.
Yeah.
I just need to have a bit more information about that. The reason I'm asking that question, it's because I moved from Northworth, Manchester, which I was on a right to buy.
Okay.
So when we did apply to move into this property, which we were able to bid, obviously on the Northworth Manchester bidding system. I don't know if it's for all the government or all the associations or all the bodies that deals with having to allocate housing to individuals, but it wasn't mentioned on that system that you could probably, if you move from a Northworth or from a council house to a housing association, there could be some discrepancies. So we weren't aware of that. And so the stock transfer, I need to understand what that means, because when I was moving, I did explain that we were under the right to buy, which gave us as well a bit more discount in terms of if we were to purchase the property. However, knowing that we moved into One Manchester, which is a housing association, which then falls under most of the time a right to acquire, I was told that I was losing my right to buy. So I need to understand, so based on your stock transfer, I need to understand, how does that apply? And that's some information I wasn't made aware, because I called multiple times as well to have this information.
Okay, so the stock transfer is a large transfer of stock that happens between a council and housing association. So, for example, within One Manchester, we have 3 different stock transfer dates. So One Manchester used to be Eastlands Homes and City South Housing Trust Partnership. So Eastlands Homes had the first stock transfer. Now, when they did their stock transfer, how it worked was they were like Northwoods. So Northwoods do not own the properties that they manage. They're what's called an arm's length dealer. So they manage the properties, but Manchester City Council own the properties. So that is why those tenants have the right to buy, because their property is owned by a council. Now, our properties used to be, One Manchester properties used to be owned by Manchester City Council, but their ownership has transferred across to a housing association. So the tenants in situ at the time of those transfers then gain what's called a preserved right to buy. So essentially the actual right to buy itself is lost, but the housing association that they stock transfer across to will honour it for the time in which you live with that housing association. If you were then to leave that housing association, your preserved right to buy with them would go. And if you joined another housing association, you would go to their right to acquire. So for your personal circumstances, you chose to move from a council property to a housing association property, whereas those who are part of a stock transfer, although some places have votes and things like that, it's something that's very much so decided amongst sort of the housing association and the council, so to speak. So to take somebody's right away from them would be unfair. So as part of the stock transfer, the housing association agrees to honour that right. Am I making sense?
You are making sense, and I think it's good to know that. But unfortunately, that's something that whoever is going through that process of tenancy has no idea that's happening, and no one is there to explain to them that this is what's going to happen. if you do this, if you take the move from the council house to the housing association. And I think that's where I think there is some sort of discrepancy, and I think that's where we all, there's a bit of frustration, because you've been in a housing. I personally have been in a council house I lived there for over 7 years with my husband, so we do, that was a good chunk of discount I could have gotten. But then when I was transferring, nothing was being said, nothing within the system. Not the person that did, whoever was supposed to dealing with our case didn't mention anything. And I think it will make a big difference if applicants are actually going through the process and try to understand, okay, if I take this property, who does own that property, and what are the impact? What is the impact on me in the future trying to get that property?
I mean, first and foremost with that, I would say to you, ensure that you read your new tenancy agreement, because One Manchester tenancy agreements outline that you do not have the right to buy. It says that you do have the right to acquire. I know that the City South ones outlined that the new one, so for City South, the stock transfer is 2008. So anyone who signed up to City South after 2008, they will have the right to acquire their tenants. Those tenancy agreements said in them that you do not have the right to buy, you have the right to acquire. If you aren't able to see that tenancy agreement until the last moment, then your best option is to phone the housing provider and ask to speak to the right to buy team themselves and the right to acquire team themselves, because it is something that has a lot of floaty about knowledge. It's not necessarily always specific. So people do get confused by it. There are times when, unfortunately, the person that you trust to give you that information misguides you. So I'd say like you've done, put the onus on yourself to read that tenancy agreement, contact that provider and find out what impact your move has on the right to buy or your right to acquire. So for example, if you were to leave your housing association property for another housing association, and that housing association gave you a starter tenancy as opposed to an assured non-short hold tenancy, you would have to wait 1 year before you would be eligible to apply to buy that property, because you'd have to wait for your tenancy agreement to become non-short hold. Other examples, your right to buy is not transferable by way of mutual exchange. The legislation takes over in that one. I've seen on several occasions people who've done a mutual exchange under the impression that they are literally swapping tenancy agreements with the person they are exchanging with. That isn't the case with the right to buy. The right to buy is only transferable by way of stock transfer or statutory succession. Now, in terms of the statutory succession, that is something that will depend solely on the housing provider and their policy. So you would have to ask your housing provider about that. And mutual exchange, it doesn't transfer like that, the right to buy. You can't have the right to buy. So the reason it doesn't exchange like that is, for example, you could get somebody who's always been a housing association tenant. They've never actually lived in a council property, and then they do a mutual exchange with somebody who lives in a housing association property but has a preserved right to buy. If you were then to give that person who moves into the other person's property who has the preserved right to buy, if you were to give them the right to buy, they would have the right to buy having never lived in a council property. So in that case, the the legislation for the right to buy kicks in and says, no, you can't do that.
Okay. Thank you very much, Amy. Does that answer your question, Dominic?
No, that's fine. Thank you. Thanks, Amy.
Perfect. I'm going to bring in Azy before I take the questions from the chat box.
Yeah, I just wanted to respond to some of what Dominique was saying. I think Amy gave a really helpful, comprehensive answer, but we're also part of a partnership of Manchester Move. So I will pick that up as well in terms of making sure that things are clear when people are making choices around transfers and etc. Thank you.
Thank you very much. Okay, so we have another question in the chat box. Dee Taylor, she's saying, hi Amy, if you're a housing association property, if you're in a housing association property prior to 1997, that has not been transferred from council, what right do you have if you lived there for over 25 years? Seems those tenants fall through a gap of meeting the criteria of right to buy or right to acquire. Any suggestions on what right to be able to purchase the property?
So if you're a housing association tenant, it is very, very likely that you have the right to acquire. Housing associations weren't common in 1997, but they were there. And it's likely that you'd have the right to acquire on your property. Definitely not the right to buy, because again, you are that housing association tenant. But I'd check with your provider, to be perfectly honest. But it's very likely that you'd have the right to acquire.
Okay, perfect. Thank you, Amy. Dee, I hope that answers your question. We have another question from Lorraine. Hi, Sarah, great presentation. Sorry, 1 second. Yeah, hi Sarah, great presentation. Some of the people who've been hardest hit by the cladding scandal are leaseholders in shared ownership schemes. Because of the way the leases are set out, they now face paying 100 PC of remediation works, despite only owing a fraction of their properties. This cost could exceed the total amount that owners have in their homes, leaving them in negative equity. I think it was maybe a comment, not a question, but I don't know if you want to say something on that, Sarah?
Yeah, I would just say it's just an awful situation all round, to be honest. You know, there was a programme on it not long ago, I think it was on BBC, and it was highlighting mainly shared ownership apartments in London, where obviously there's a lot of apartments in London. I do know there's some in Manchester that are suffering from this issue as well. The government have announced a funding to help remediate some of these cladding issues. I think it is about £1 billion, but don't quote me on that. It's somewhere in that region. And I know that, you know, it's being worked on best it can at the moment, but it is just an awful situation for all involved. I'm sure in time you know, some resolution will come forward, but yeah, no, I agree, it's awful. I can't really say anything more than that, you know.
Thank you, Sarah. I have another question here from Ngozi. I live in a housing association house almost 15 years. Will I have any discount if I decide to buy?
Okay, so if you live in a housing association, your discount is likely to be that of a right to acquire discount. So it depends on your area. I did put on the slides before as to where areas have what discounts. If you want to access that as well, you can go to the DirectGov website, and they have a full list across all areas, across all of the UK, that outlines the right to acquire discount for everywhere. But number of years makes no difference when it comes to right to acquire. It is a set amount.
Perfect. Thank you very much, Amy. I just want to encourage people to ask as many questions as they can, because I know that we don't often have this opportunity to speak with the experts. And I also know that within the community, sometimes people are just put off from starting this process because they think it's complicated. And I'm happy Dominique shared her experience with One Manchester, and it was overall a positive experience. Sometimes we're more afraid of the process without exactly knowing what it is. So please do ask as many questions as you can. I'm sure Sarah and Amy wouldn't mind. But before any other question comes up, can I just ask, I think it was Sarah who shared it. I'm not too sure, sorry. The affordability calculator, where do you find that? Is that online?
Yes, if you put, I'm trying to think of the easiest search tool. If you just put Homes England affordability calculator into Google, it should bring the latest one up. It is hidden somewhere in the capital funding guide. And again, if you put capital funding guide and shared ownership, you can see all the criteria, etc. And there's a link in there for it as well. But I'm pretty sure if you just put affordability calculator, it'll bring it up. And I can put a link to it if you like in the chat, if that'd be useful. Yeah. If
you don't mind, Sarah.
Yeah, I'll have a look for it now. Yeah.
That'll be very useful. And I think you mentioned as well about the EPG. I think is the energy efficiency.
Oh yes, the EPC. Yeah.
Yeah, EPC. How do you check that as somebody who is not an expert? Because sometimes, like you mentioned a house you're selling in Cletton. How can somebody check that? I'm not saying that the information you're putting or a landlord is putting will not be wrong, but will be incorrect. But if somebody would like to double check that is
that's accurate.
Yeah.
Again, when you're selling properties or you're offering properties for rent these days, you have to put the EPC in the advertisement. But if there is a register, an EPC register, and it's run by the government, so an EPC has to be done every 10 years if you're renting a property, or when you're selling a property, one has to be done. So there is a list, and again, if you put EPC register in Google, I love Professor Google, it will bring it up, and you'll see the EPC register. You click on it, and then you can search for a property on postcode and address.
That's amazing. I didn't know that. I have a special interest in housing and stuff like that, but I never knew you could do that. So thank you very much.
Yeah, no. And again, I can put a link in the chat. I'll do it in a few moments.
Thank you very much, Sarah. Yes, Dominic, you want to come back in?
Yes, I do have two questions. One is still under the right to the right to buy and the right to acquire. I think a couple of years ago there was a scheme that the government was kind of trying to put in place for those that left council houses to housing association to be able to transfer the right to acquire in that way. I know it was still. I think they started rolling that out in few areas, but Manchester wasn't part of that. I just want to know if there's if you guys have any updates, Sarah or Amy, about that. I don't know if it's still in place or if it's completely been ruled out. The last I checked, I was told that it was still, there wasn't any information about it for now, and it was still, the government was still, it was just on hold. They haven't updated anyone on it. The second question I do have is on the solar panel. This is for those that are on the housing association. Do they have the right to purchase any solar panels for their properties if they want to switch, for example, for a more efficient way of having electricity into the property? And if you've purchased a property, and if you purchase a property from you guys, it's a bit tricky. Will we have to request any planning or any planning permission, for example, or anything in regards to having to install solar panels into the property, knowing that we've purchased the property from you guys? Sorry for the three big questions.
No, that's fine. So the scheme you're referring to is the voluntary right to buy. They've run 2 pilot schemes for it so far, and it was deemed a success, but they've done nothing with it since. So that is very much so something that is government based. If they roll it out in legislation, then housing providers can sign up to it, and that would be an option for those who have the right to acquire, to gain a discount similar to that of the right to buy. I suppose it's a double-edged sword. It's a case of, do you wait for that, or do you purchase now? There's lots of things to take into consideration with that. So you have to take into consideration the fact that obviously if the value of your property is just going up, how long do you wait?
You want to wait
for
to be able to
something
get
that
that?
might not happen? In terms of gaining information on it, the public have as much as we have, to be perfectly honest. Google it, read the articles about it, and make whatever decision sits comfortable with you and your circumstances, to be honest.
Can I just on that, I'm presuming that if the scheme comes out, that will not be, they won't backtrack to anyone that was previously, isn't it? Okay.
I can't. I mean, there's nothing set in absolute stone and specific about it. I would highly doubt that they would suddenly backtrack and provide discounts to people who have purchased. To be honest, I think they would just be from that point forward. I do know with it that it's about housing associations signing up for it. At the moment, it's a case of if the housing provider signs up, not necessarily a flat rollout. But like I say, nothing with that scheme is set in stone.
Okay, that's fine, thanks.
Okay, and
for the solar panel, sorry.
Yeah, in terms of your property after you purchase, if you've purchased leasehold, you need to check your lease for what you can do to the property. Your best bet is to contact the leasehold team, to be honest. And if you have purchased freehold, you are under the same restrictions as anybody else. So if you want to put up an extension beyond whatever it is you're allowed to, you need to apply to Manchester City Council for that extension. I don't know if you have to have planning permission for solar panels, to be perfectly honest, but One Manchester, if you have purchased a house from us, would not have any objections to solar panels going on your property. I suppose the only time there may be when you would need to contact us would be if it was very close to another person's roof. I'm not sure of the sort of ins and outs of regulations of putting solar panels on, but from my standpoint, from the right to buy standpoint, there are no restrictions on your house and what improvements you can do to it after you've purchased. I suppose the only restriction relevant there, sorry, I'll make the slide go back on. The only restriction relevant there is if you were to borrow extra money against the property to pay for any improvements you want to make. Okay, so if you want to borrow extra money within the first 5 years, you will have to get a deed of postponement from One Manchester, so that they would agree to lowering their charge on the property. The absolute ins and outs of that are quite financial. I'm trying to explain it piece by piece is what I'll do now. So essentially, when you purchase your property through the right to buy or the right to acquire, your mortgage has charges on. So if for whatever reason you were not to repay that mortgage and it got repossessed, or if you were to sell that property on, obviously there's a charge against the property to say that you need to pay the mortgage provider everything back. And then there's a second charge that is One Manchester to say that if you sell within the first 5 years, you need to pay One Manchester back. If you want to borrow extra money against your property, you would then have to have One Manchester move down to being a third charge. And to do this, you would need to gain a deed of postponement from us. We would only, and most housing providers will only agree to you borrowing extra money against your property for home improvements. And they would ask for 3 builders quotes to demonstrate what you're likely to pay and what home improvements you're having done. And then once that was done, we would then ask for receipts of that work has been done. So if you want to borrow against your property to go on holiday, you can't do that within the first 5 years. But if you want to borrow against your property to put an extension on, it is highly likely that you'd be able to do it. You just have to gain a deed as postponement.
Thank you for that.
No problem.
Perfect. Thank you very much, Dominic. Thank you, Amy. That was a very detailed explanation and it really helps, to be honest.
It's definitely not the easiest one to explain.
I have another question in the chat box there from Ngozi. She's asking, is there an age limit considering I'm over 50 and do I have to have a 35 years mortgage?
You can have whatever term mortgage you are capable of repaying. Your age is something that is financially relevant. It's about what a mortgage provider is willing to give you. In terms of the actual right to buy and the right to acquire, your age does not prevent you from applying.
Perfect, thank you very much. Do we have any questions from anyone who would like to ask a question? Please feel free to unmute yourself and just chip in questions or comment. Yes, Marina.
Hello, good afternoon, good evening, everyone. Thank you very much for this great presentation, very informative and very, very useful. I've got a question here to ask. I don't know if I missed a bit or didn't maybe get it properly. Coming from Rochdale Borough, are you allowed with the, actually coming with the, within the Rochdale Borough with 9 years right to buy and right to require, are you allowed to buy property for one Manchester or share ownership and get actually transfer your discount for where you're coming from? Is that possible to do? And where can you find this information and what do you need to do for the application?
Sarah, please.
Yeah, just so I understand the question, you're a current housing association tenant and you've got the right to buy or right to acquire, and you want to purchase a shared ownership property.
Yeah.
Is that right?
Yeah, coming from Rochdale, are you still are you allowed to kind of buy something within one Manchester, or you need to be actually only within Manchester? Coming from Rochdale.
Yeah, you can cross-subsidise at the moment. So you've either got the right to acquire or right to buy on a property, or you can purchase through grant funding a shared ownership property, and the two are separate. There is something new coming out called, let me get this right, it's the right to shared ownership. But that's a new grant funding programme and that be coming in the next couple of years. It's just in the new funding programme. So we'll not be seeing them for a while, but in your current property, no, you wouldn't be able to swap to a shared ownership property and get the discount.
Okay, great. Thank you for that.
No worries.
Thank you, Sarah. Thank you very much, Marina. Any other question, please?
There is one in the chat box, I think.
Okay, yeah, from Hannah. Is it best to aim for more than 5% deposit if able to afford for a help to buy?
I would say aim for the deposit that you can afford, really. 5% is the minimum, but if you can afford more, do so. You just need to take into account, you know, with moving, you've got your solicitor's costs, you've got your moving costs. I mean, just, you know, hiring a van, you know, and 2 men to lift everything, it can cost a bit. So yeah, just what you can afford. Obviously, when it comes to it, the more deposit you can put down, sometimes you'll get a better rate of mortgage. So it's just looking at all the best options open to you, really, and having a chat with a good financial advisor, you know. Shop around a little bit, make sure you get your mortgage rates. But yeah, financial advisor is the one to talk to.
Okay, thank you very much, Sarah. I hope that answers the question, Hannah. I mean, I have to say, Sarah, the shared ownership, it's something I never got my head around to understanding. And it's really great to have you here explaining that, because I've been through this buying process in the past, but the thing sometimes if you don't understand something, you don't really want to come closer to it because you feel it's not relevant to you. Where can people find information? Are you able to share this presentation, or If people would like to have more information on this share ownership, for example, you've presented, where can they go?
Well, yeah, I'm happy to share the presentation. I have popped the little video in the chat as well, which is on shared ownership. Go on the One Manchester website. There's a lot of information on shared ownership on the One Manchester website, and I'm happy to give my details. And if you want to chat, just give me a call and we'll have a chat about it. But yeah, if you put shared ownership again in Google, I'm promoting Google tonight, aren't I? If you put shared ownership in Google, you will get a lot of information coming through. But I'm happy to answer any questions or queries you might have. Yeah. And I can send leaflets out as well if you like.
Oh, perfect. Thank you so much, Sarah. That's very helpful. Just a quick question from me. I know during the valuation process, I think I've had this conversation with friends, and most of the time, I think people don't really know what affects valuation. Some people think that before the surveyor comes, your house needs to be clean, refurbished, paint, and all this. Does that matter? Does that increase or decrease the price? Is it good for you or bad for you?
It doesn't really affect the price as such. Valuation is a little bit subjective, but when a surveyor comes around, they have to follow certain rules. It's called the Red Book. It's what RICS have put down as guidelines. And so, yeah, why having a nice, clean, tidy house can, look good, it won't necessarily have an effect on the values, because what the surveyor will be doing, they'll be comparing that property with properties that have recently sold in that area that are similar. And if there's no similar properties, they'll make adjustments to other properties so they can get them as close a match as possible. So, a clean home won't necessarily affect the value. No, it won't. No.
Yeah. I mean, when I say clean home, it's more of a, I know someone who were in the process of purchasing the property, and they had loads of issues with mold on the ceiling, on the walls. And the council, that was with the council, and they were struggling to get to a proper sort of solution, really. Anything they tried in the past didn't work. So they were wondering whether the surveyor will account that in the discount.
Yeah.
So if you have a... Yeah, sorry, go on.
Sorry, the internet's breaking up a little bit. If there's an issue in a property such as damp, mold, or certain repairs that are required, the surveyor will take that into account, and they'll adjust the price to take that into account. So they might have a comparable that's of good standard, and then they'll make an adjustment to get the properties to match each other. So they might, for example, if you've got, I don't know, a property that's got damp or mold in, say, a bedroom, that will be coming from, for some reason, such as a roof leak, or there's cold bridging on the cavity, or whatever it may be, and the surveyor might adjust it for £5,000 to take into account that issue that needs to be repaired. But it's very difficult to say, with any certainty what they would discount, because it's a bit subjective valuation. But what they do is they look at the market, what's sold, and they compare against that, and then they make a judgment using the rules in the Red Book to what they have to adjust by.
Perfect. Thank you very much, Sarah. So one more question in the chat box. How does one register for shared ownership, and how does one get list of where the properties for shared ownership are? Yeah.
There's two things you can do, really. Is One Manchester, we don't really advertise our shared ownership properties that much because they're just so popular. We have signboards that go outside. When we're developing a new site, we put a signboard up, and we normally get people from the local area who are interested, and you go on our website and you'll register. So if you put shared ownership One Manchester in Google, you can see what properties we're building that's coming up, and we've got a couple of schemes that are coming up back into this year, next year, and you register your interest. So when we're then ready to launch that scheme, you'll get an email to say, we're ready to launch, here's the prices and what you need to do, etc. So you can do that, or you can go onto the Help to Buy Northwest website, and I will pop the link again in the chat, and there's a search function in there, and you can find shared ownership properties up and down the country, so in Liverpool, Manchester, everywhere basically. And have a good look. So there's various ways to find them. They'll also be on Rightmove as well.
Yeah.
Yeah.
Perfect. Thank you very much, Sarah.
You're welcome.
If we don't have any more questions, we're 4 minutes to the end. So Ngozi is saying thank you all. Thank you for the detailed answers. Just one last question. Please, can you explain freehold?
Do you want to do that, Amy, or should I?
I don't know.
Basically, there's two types of property in England. There's freehold properties, which means you own the building and the land. And then there's leasehold, which means you own the right to live in that building for a set amount of time. And that's the basic difference, really. It's quite feudal. It comes back from Norman times or something like that. But it's the two titles that we have in England. And basically, if you own an house, normally it will be freehold. That makes sense.
Okay. Yeah, perfect. Thank you, Sarah.
You're welcome.
Okay, I have another, Ngozi saying thank you. So another question from Emo. It's often a maze wading through a sea of financial advisors. Can you help signpost to credible sources of finance, mortgage advisors, surveyors?
Yeah, it is a difficult one, isn't it? I mean, there's so many professionals out there. Who do you trust? We can't recommend anybody because we're not FCA registered, so I can't do that. But if you go on the Help to Buy Northwest website, which I've mentioned a few times now, it has a list there on people that they recommend. So that's who the government have recommended. One Manchester do have a service agreement with a company called Metro Finance, and they do all the, the affordability and sustainability calculation I mentioned on the shared ownership. Metro Finance do them on behalf of One Manchester. And they also do shared ownership mortgages as well. But yeah, I would just say go on the Help to Buy Northwest website and have a look what they recommend, because they've been vetted. Yeah.
Perfect. Thank you very much, Sarah. Sorry, when I thought the crowd was quiet, questions just kept coming. Yeah. One more question from Christine. Do you have to be registered with One Manchester before you can be accepted for shared ownership?
Well, with shared ownership, because they're offered for sale on the open market, you would register your interest. And then when we launch the scheme, that's when you then contact Metro Finance, who do our affordability assessments, and you go through the process with them. Once they sign you off, we can then take a reservation on a property.
Perfect.
So you just need to register. Yeah, just need to register your interest in them, so you're aware when we launch.
Okay. Perfect. Thank you very much, Sarah.
Yeah.
Okay, so we don't have any further questions in the chat box. We're 2 minutes from the end of the session. I'm going to quickly bring in Charles to say a few words, and then Izzy will say a few words as well, and we'll bring the session to a close. Charles, please. If it's there, okay, I'm going to, is Charles coming up? All right, yeah.
Hi everyone. Yeah, just to say, on behalf of Khan, thanks to our amazing partners at One Manchester for such an informative session, and we look forward to ongoing engagement. And like we mentioned in one of our partnership meetings, this came up because someone in the community talked about it would be great to have many more Black people owning the homes they live in. So we're really delighted with our relationship with One Manchester, and we hope this won't be the last time, but many more of such sessions to come. So thanks to Izzy, thanks Amy, thanks Sarah, and then obviously the amazing Megan. Thanks for all you do. Over to you, Sandy.
Perfect. Thank you very much, Charles. Izzy, please.
Thank you. I think that's been a really helpful and informative session. I hope that you've all found it really useful, but it's been really useful for us at One Manchester to know the kind of questions that people in the community have, for us to understand about how we can communicate what are quite complex things around the different housing options, and it's given us some food for thought about how we continue that. So as Charles said, we'd love to repeat this session. I'd really like to thank my experts and colleagues, Sarah and Amy, because I think they did most of the heavy lifting and they've got all of the knowledge in their brains. So thank you very much to them. And I'll hand back to Sandy, and I wish you all a brilliant rest of the evening.
Thank you very much, Izzy. Heavy lifting, that is the word. Thank you very much, Sarah and Amy. Hopefully we can have another session at some point in the future. Just a quick update from ourselves. Tomorrow we have the Family and Advocacy session at 6:15 p.m. We're going to have a social worker talking on effective parenting, well, how to parent. It's a tricky thing here. Sometimes you think you're doing the right thing with the children when you're obviously not. So please do attend the session and ask questions as well to our expert social worker. These sessions are very informative. It happens once a month. But it's an opportunity for us to engage with the professional, because sometimes when we're engaging with children's services, it's usually when there's an issue at school or when something happened. But yeah, it's an engagement session, educational session, and I promise you it'll be really good. So, and again, we have the health hour, on Saturday, every Saturday at 11. We also have our CCRM collective community response meeting every other Friday at 1 p.m. If you do need to share any service updates from your organization, please do contact myself or email info@can.org.uk so we can invite you as a guest speaker. Otherwise you can email me. But as for today, thank you very much, Izzy. Megan, thank you very much for all the emails, and you're always up to date with everything. Thank you for communicating with the team. Thank you very much, Amy and Sarah, and we were delighted to have you on today. So have a really good evening, everyone, and a good week. Goodbye.
Thank you. Thanks, everyone.
Thank you.
Goodbye.